Hello, traders. Gary Wagner here. Just about 2:30 in Honolulu, 8:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 7th day of May, 2021, and this is the daily report for gold and silver, our weekend review. We had a dull beginning of the week, but a phenomenal ending with gold taking off, breaking above $1,800 per ounce, and copper trading to a new all-time record high. We are long both markets. We'll talk about those trades in detail when the show begins, which is now. To say that the latter part of this week was a game changer in that it resulted in key reversals in both gold and continuation on the upside move in copper. It all began day before yesterday when Treasury Secretary Janet Yellen came out and made a statement about the fact that she believed that raising interest rates at this point would be a good thing. Her point was that we are accumulating massive amounts of debt, and to keep that in check, and that is her job as the Treasury Secretary of the United States, interest rates being risen would cool down the fact that the economy is overheating. Yesterday, she really went back on her statement. She did a 180, so to speak, and clarified what she meant, saying that it's not time yet, and really fell in line with the basic tenets of the Federal Reserve. Today, we saw gold take off beginning over 1,800, which it reached yesterday, and this due to a very dismal number when it comes to the jobs report. Currently, we have gold futures closing at 1832. It traded to a high of 44.46 and a low of 18.15. Of course, if you recall, we went long gold at 1810. We'll cover that when we pull up our charts. Although gold did have a respectable gain, almost a full percentage point, the same cannot be said for silver. Silver did gain, but about 0.3%, and is currently fixed at $27.56. Between yesterday's trading activity, which resulted in gold closing over 1,800 per ounce, 18.15, we entered our trade at 18.10. We placed our stop. We'll talk about that when we look at it on a chart. But today we had tremendous follow through. Realize this, when we look at this chart, what we see is that the opening price for gold today corresponds with the closing price yesterday. That is a very, very strong statement. The only thing that could be stronger than that is if you had a gap above that. But because gold trades as a 24-hour market, gaps are highly unusual, if possible at all. The other thing that I find extremely fascinating is we identified the 100-day moving average as former resistance. I now believe it to be support. That really gave us insight and information that we could use to trade with. The same can be said for the Fibonacci retracement at 1844, because if you look at the high, 1844.20 is the 61.8% retracement, and the high that came in today wasn't that far off, coming in roughly at 1844.90, roughly 70 cents above that. Will this particular area result in any real resistance in the market, or is it simply a pause before moving to higher pricing? Because when we look at this chart, aside from this top that comes in roughly at approximately 1875 on a technical basis, we really don't have any real resistance. We will look to move our stops higher on Monday or Tuesday. We have fairly decent profits of about $34 or $3,400 per contract. So therefore, traders, maintain your current long position, maintain your current stop through the weekend. Traders, very recently, we began to hone in on copper, studying that intently, and talking about the fundamentals behind it, which, as far as I'm concerned, almost guarantees higher pricing. What I mean by that is that we have a supply of only 3.3 weeks left, and most importantly, demand is greater than the ability to supply needed copper. Today, copper moved up over 3%. It's at $4 and call it 75 cents per pound. We are in at $4.55 per pound. That represents a 20-cent gain. And realize every penny move on the large copper contract represents $250. And so that's quite a nice profit over the last couple of days. On today's report, we will continue to look at where we think copper could go based upon our current technical studies. Traders, as you know, over the last couple of weeks, we have been intensely studying the fundamental events behind why we have seen copper move so high, not only in the recent amount of time, but really if you go back to March of 2020, it was trading at approximately $2 a pound. It has more than doubled in the last year. We had a tremendous move in copper today, and the fundamental events are very simple. With global economies rebuilding, there will be a necessary need and a huge demand for the industrial metal. Right now, it has been estimated there is only a 3.3 week of active supply, and whenever you have demand far exceeds supply, by virtue and nature, that price of that commodity can only go higher as long as demand raises and supply dwindles. As such, we saw it broke to an all-time record high. The former record high was $4.65. We got in at $4.55, so we've got a couple of cents on there because we are at $14.74 and change, about 20 cents. Realize at 2,500 pounds per contract, every penny move represents $250. So that is approximately a $5,000 profit over the last 2 days. Now, this is the large contract of copper, and the margin is quite high. I believe it is approximately 60,000. For those that want to get involved in copper, but that is more capital than they are comfortable putting into that particular trade, there is a mini contract which is 1/10 the size of the large contract, and the margin requirement is approximately $6,000. Now, while you're not controlling 25,000 pounds of copper, you are controlling 2,500 pounds of copper, which means that every penny move represents roughly $25 in profits. In either case, my belief, according to our technical studies, along with forecasts from the Bank of America Strategic Commodity Division, are looking for copper to go to $5.89 per pound. That's 13,000 per metric ton over the next 2 months. I don't know how they arrived at their numbers, but I do want to look at a chart that will show you how we arrived at roughly the same price point. As you can see, we have greatly compressed the chart as well as adding an Elliott wave so we get a concept or an idea of where we think the market could go. In essence, what this is particularly looking at is the conclusion of a second wave that began roughly in 2003. We were trading at about 75 cents a pound. We had an extended move to the upside, creating a major wave 3. Then we had a multi-year correction, which began from 2011 and concluded at the end of 2016, beginning of 2017, which, by the way, is the same time we saw gold prices bottoming. And then when that came in, it came in just under $2 per pound. But here's what I find most interesting. If we look at recent activity, which is from March of last year, that is this low here, we had copper trading at approximately $2 a pound. it has more than doubled in approximately 1 year, going from $2 to $4.74. Now, when we look at the projection that is created from this Elliott wave, and I'll show you how we do ours, which is to use an extension, you can see that this particular technical study is forecasting that copper will go almost to $6 a pound. That is roughly $1.25 away from here, based upon the contract size and the amount, meaning $250,000 per dollar move. We are talking about a $300,000 plus move with approximately a $60,000 or $70,000 investment. Traders, I've been doing this for 35 years, and this is possibly one of the greatest opportunities I have witnessed in all of my years of trading, because we have such a huge demand, such a small supply, and because we are revitalizing economies worldwide. I would expect that to continue not only through the end of this year, but 2022 as well as 2023. There is yet another way to do the forecast, which is in essence to use a Fibonacci extension. We'll go ahead and do that now. What I find very obvious and odd is the forecast by commodity strategists at Bank of America are really coming in with almost the identical number that our Elliott wave studies are showing us. There is a couple of ways to do it, and one of the most primary and accepted ways is to take a look at the move that we had from 3 to 4, which would be this particular move down, where we saw copper go from about $4.50 down to just below $2. This would be our starting point for the parameters that we use for a fib extension. And traders, while it is quite easy to do this by hand, we will use the eSignal data platform. You can see that wave 1 begins, wave 2, the corrective wave, concludes down here at about 2002. So our first line comes in here. We will then take that up to the conclusion of wave 3 and then begin our basic extension from the bottom of wave 4. Now, here's what I find extremely fascinating. It is quite obvious that the commodity research team over at Bank of America utilized some form of Fibonacci extension, because what we can see is the number that our Elliott wave get system is predicting is to come in at roughly 1.5, and that comes in at approximately 6, which means that the first extension that they are looking at is a 1-to-1 relationship between wave 3 and wave 5. While that is very, very rare, it is more likely that we will see an extension either going to the 1.23% retracement that comes in at 69, the 1.382% extension at 75, and during times of extreme market rallies and extended fifth waves, you can easily see an extension of 1.618, and traders, that comes in over $8 a pound. What I'm trying to say is we don't really have a top as to where copper could go, because it is going to depend on an increasing demand, a diminishing supply. But at any point between 1 and 1.61% extension, you are looking at about a $70,000 investment, as I said, exceeding $1 million return. Traders, maintain your current long position in copper. For those who haven't entered, I believe there is still time to do such, and I believe it will be the most profitable trade that we have recommended since we began the gold forecast in 2010. This is Big Gary Wagner wishing you, as always, good trading. Maintain your gold position, maintain your copper position. We'll talk to you on Monday for the next daily update and review. Bye-bye.